Yeah, this a hit right here, Zay.
Only got that heat.
Hey, what's up, you guys? It's Christian with WMGFX. Just wanted to hop on here and do a quick video about this trade that I took on Nasdaq this morning. So first, I want to kind of dive into the markup that I sent yesterday in the Telegram. This was at 8:30, I believe it was, 8:24 last night. So when I was looking at Nasdaq, my bias overall has been bearish, right? I was kind of expecting for us to get down here, and the reaction I was looking for was up in this fair value gap, right, and in this 4-hour order block area, right? We initially got the reaction, right, and I got the trade I was expecting, but as you can see, price is it's just continuing a little bit higher, so we could be seeking this high up here, right, this liquidity pool. But before we get into any projections of what we think is going to happen next, potentially, let's dive a little closer into the markup that I had and what I executed on this morning. So let's drop to the lower time frames. Get the annotations up. All right, so when I hopped on the chart, it was like 4 o'clock in the morning, as always, right? So I saw the price was coming up into the point of interest that I was looking at last night that I sent to everybody, right? So what I was just basically looking for a reason to sell off, right? I was thinking that we were going to get below here. I saw these equal lows, right? In this intermediate term low, the short term low, there's another short term low right here and over here. So I expected price to kind of, give us something to sell off and break below. We did eventually get pretty close, but then price just decided to do this little whipsaw action and kind of give us a sell off. But then, of course, we catapulted from a discount. Now we're going up into premium price levels. But essentially what I saw in the moment, right, was, well, we were right here, right? What I noticed was there was S&T divergence between the S&P and the Dow, as well as the Nasdaq. So Nasdaq was making a lower high, pushing into our 4-hour order block and the fair value gap that I have outlined right there, right? So when I saw that, I assumed, okay, let's look for the model to enter and catch the sells. My first target was going to be right here at the equilibrium from this low to this high. Equilibrium price point. Watch. It was the equilibrium price point. So that was my first target. And let me pull up the execution so you guys can see the actual entries. Execution. So there's the execution right here, this first red arrow. Okay. When I saw the whole, I kind of entered a little bit early, right? I was already expecting, like on the lower time frame on the 1 minute, I saw this break in structure right here. Let me see if get to it. See, I saw this swing low right here, right? And as we broke that swing low, what was I looking for, right? What does the model say, right? The model says look for a fair value gap after we take liquidity and we break a swing low if we're bearish, right? So right after that happened, right after I saw this get below this low, that's when the little light bulb turned on, right? And then when we get this pullback, I saw this order block right here. Not really much of a fair value gap, but I just trusted the order block, right? I trusted that we were in, there's a little fair value gap right there, right? But I just trusted the order block because of just us being in the 4-hour order block zone overall, and being in that fair value gap and showing rejection, right? There was a break here, then this break of this short-term low or a swing low, right, ended up just tipping 10. And then as I saw price come up higher and this failed to break above this high, okay, that's when I decided, you know, when I saw the SMT, that's when I was really confident, right? And then price ended up selling up. I did have an execution video for this, but for some reason it only recorded like my voice for some reason, and it didn't record anything that has to do with, you know, the process of the trade itself. But nonetheless, that's pretty much why I'm doing the breakdown instead, just so you guys can get some value from this in my perspective and kind of see where I entered, why I entered, see the model in action, right, with a commentary, as well as my reasoning behind the setup and my targets, right, where I took profits. So as you can see, when I entered here, when I saw this SMT divergence, that's when I got really confident, right? So when it started selling off, my first take profit was going to be right here at this fair value gap, right? Because that's one of the rules as well, right? Take it at the next PD array. Take partials, right? So I took partials there as we were crossing through. And as price came up, I was considering taking another entry here because as you could see the fair value gap, but I chose not to. And I just figured that I'll just take the rest of my partials out when we get below these lows. But you know, as price started coming up and it broke this swing high, I started, you know, losing faith in the fact that, you know, maybe we're not going to, you know, pull lower, right? Maybe there's going to be some bullish momentum coming to the marketplace. And we were approaching 6 o'clock. As you guys probably know, there's a lot of volatility that comes around at that time. This was before the time window that ICT talks about, stuff like that. But nonetheless, sometimes, you know, when the model performs, you know, 4 o'clock is the New York kill zone, right? The traditional kill zone that ICT speaks about, okay? So, you know, considering that, seeing the model perform, I felt confident, right? I don't always have to trade in the AM or PM session. Sometimes it happens before, and you just got to build that intuition to be able to spot it, you know, when we're before the time, or you could just, you know, do it after the time comes, right? Like, because right here we ran sell side liquidity, okay, and there was a swing high here, right? After it ran sell side liquidity, what did it do? It accelerated up, all that energy, right? We want to look for energy when swing highs or swing lows are broken, and then our eyes go back to the fair value gap, which you can see here. Boom, came back to the fair value gap, and that was a good entry for a buy as well. I would have, you know, taken another entry, but considering that I already bagged, like, well, from here to there, already bagged 100 plus pips or points, whatever, you know, I basically just was content with that. I did assume that we potentially would have, you know, continued to fall. My bias was still bearish up until this point. So when we dropped down below, I considered that, okay, maybe this is the break or the shift in market structure for us to continue lower. But of course, right, it ended up just taking us out for a small loss. So here, I'll show you the executions from today, the account history, so you can kind of see. Okay, this was before the loss, right? So like 6 something, like almost 7,000 gain, and the loss was minimal, right? So, you know, one thing I can speak about in regards to this type of scenarios, you know, you got to learn when enough is enough and how to stop, because most traders, they'll make money and then they won't know how to stop. You know what I mean? Like, I have a 3 trade rule, right? One of my rules is I only take, you know, max 3 trades a day. But if I see something and it seems valid, then I'll take another entry at a smaller position, right? Just to see, right? And if it takes me out, it takes me out, right? But all in all, we'll finish the day in profits, okay? So you got to know when to stop, right? That's a huge thing that you want to consider mastering, right? Because if you don't know how to stop, how are you going to preserve capital, right? And the number one rule or the number one objective when we're being traders is we got to be able to preserve capital, right? It's one thing to gain and you know, have a system that works and be a profitable trader, but you can't ever achieve long-term success if you don't know how to preserve capital manage your risk and, be able to tell yourself, okay, it's time to stop, or, be content with enough, right? Because that's enough. I don't have to be in the marketplace every minute of every session. You know what I mean? Like think about it. If you make $1,000 in the market, why would you have to make more? I mean, if you're taking a challenge or whatever, I understand that scenario, but the worst thing you can do is try to, push your edge too much, because at the end of the day, the more you're in the market, the more risk you're putting on. You know what I mean? It's not like a job. We don't show up and get paid, just for our time. We show up and, follow our plan, manage our risk, preserve capital, get our low-hanging fruit objectives, and get the hell about the marketplace. You know what I mean? So there's always another day to trade, right? But yeah, in closing, right? Let's kind of go over what's currently happening, just so we can kind of see what did transpire, right? The price did end up taking everything out to the downside before it ended up blasting off. Didn't hit our full objectives below this low, but nonetheless, that little catapult, right, ended up shooting up. So we could be seeking higher objectives. I feel like maybe we'll come down below this low potentially, or fill this fair value gap and then continue for the PM trend. But nonetheless, right, I'm done trading for the day. So if you guys have any questions, right? Oh yeah, I didn't speak on this. This thing. This is a good thing for me to point out real fast. Right. So if you guys take a look right here, right, with this being a failure swing, breakers are like this, right? Breakers, this is what a breaker looks like. Boom, boom, boom. Okay, that's a breaker. And a mitigation block would be like this. Okay, so that's the difference. I know there's a lot of people that have asked me questions and probably have this in their mind, like, what's the difference between those two patterns? And since I have it marked up, right, it's only right that I kind of point this out. But if you guys don't know the difference between a breaker, right? A breaker looks like this. You enter on this last down candle. And over here would be a mitigation block, right? You would enter on this last down candle, the failure swing. That's the difference. Breaker breaks above the high, a mitigation candle or mitigation pattern, whatever. It looks like this, right? It's a failure swing, and the breaker pops above. So just thought that would be useful for some of you guys that may trade breakers, right? But all in all, right, if you guys have any questions, right, or comments or difficulties or whatever it may be, feel free to leave them in the comments. Make sure you subscribe, share this video with anybody that it could possibly help, because that's basically why we have this channel in the first place, is just to share perspective and help in any way possible, because times are crazy right now. So yeah, I hope you guys have a blessed day. Let me know if you guys have any topics you'd like me to cover or dive deeper into. I'd be more than happy to assist you guys with that and give you my perspective on things. So, all right, you guys, take care.
Yeah, this a hit right here, Zave.